Hello, I hope you are well this very first week of May. This week we are tackling charitable donations specifically because it is Give Big week, for a couple of days. Give Big, if you are not aware of it, is a 2-day charitable organization fundraising event for the state of Washington. So May 2nd and 3rd this year. It's just a great 2 days to go support the organizations that you enjoy supporting, band together with people all over the state to benefit those organizations. In a lot of cases, organizations are receiving matching funds over these 2 days. So it's just a great way to support organizations doing good in our community. So the first thing I wanted to say about charitable donations is to make sure that you're choosing reputable charities. If you're finding them on the GiveBIG website, chances are they're fine, but there are a couple of different ways you can check out your chosen charity and make sure that they're legit. The IRS has a tax-exempt organization tool that I will try to provide the link for below, and Charity Navigator is another great resource to see what the rating of your charitable organization is and how they're spending their money. So for tax purposes, you can take a tax deduction if you give a donation to an eligible organization. And usually that's those US-based 501c3 sorts of nonprofits. It's your churches, it's your United Way, it's your PTA, museums, your state parks donation when you renew your tabs every year. You don't get to deduct contributions to political parties, political groups, lobbyists, those kinds of things. So for the tax deduction, in general, you're going to deduct the dollar amount that you donated, or if you give stuff to Goodwill, the thrift shop value of that stuff. Or if you attend a fundraising auction and you purchase something at auction, your deduction will be the difference between what it's worth and what you paid for it. So if it's a $100 item and you paid $200 for it, you get a $100 tax deduction. The benefit is not dollar for dollar. So if you give that $100 and you're in the 12% tax bracket, that donation saved you $12. But hold on, it only saved you that $12 if you're itemizing. As we talked about in another video, the standard deduction is so high that a great number of people aren't itemizing these days. And so if you are one of those that you are not paying a good chunk of mortgage interest or giving tens of thousands of dollars to charity every year, you very well might not be itemizing and you may not get a tax benefit. It's deductible, but it may not benefit you. The proof that you need in order to take that deduction, if you give money to an organization, you have to have some sort of documentation. So if you give cash at a church, for instance, make sure that you're giving it in a way that they can track it and give you a receipt. Often churches will give you envelopes with an identifying number on them so that they can tie that donation back to you and give you that receipt. If you're giving checks, you've got copies of the canceled checks. If you're giving electronically, there's some sort of record. If your donation is over $250, you must receive a written receipt from the charitable organization. They're supposed to give that to you. Some don't, especially smaller ones, but make sure you get that. Make sure you get it by January 31st. If you're giving non-cash stuff, so you're giving your clothing and household items and such to Goodwill, you do have to get a receipt for that. They don't fill it out. They don't put any information on it. You're required to fill in what did you give, when did you give it, how much was it worth. And again, you're looking at the thrift shop value for that, and I'll try and include a link for that as well. Your clothing and such has to be in good condition, used but good condition, in order to take a deduction. If you give more than $5,000 worth of a similar kind of stuff, like $5,000 in clothing, you're required to have a appraisal. So you really need to have good record keeping if you're going to take this non-cash donation deduction. If you donate a vehicle to charity, the charity will give you a 1098-C form that will be needed for tax prep. So there's some alternative types of donations just that I wanted to just bring up. One is if you're over age 70 and a half, you can give a qualified charitable donation from your IRA account. The money goes directly from your IRA to the charity. And in that case, you don't include that income on your tax return. So you're not getting a charitable donation deduction for it. You're just not taxed on the income. So definitely a better way to do your donations if you're over 70 and a half. Donor advised funds, if you'd like to take the benefit of several years worth of donations at once, you can make a sizable donation to a donor advised fund, which can then invest the funds and then distribute them to charity over years. That one's still a charitable donation on your itemized deductions. Donating stock, you can donate taking the value of the stock. So that can be a great option and requires a little more tax planning. Keep in mind this whole video is very general. Please consult your tax advisor if you have questions. The other thing that's sometimes overlooked is deducting your expenses if you do volunteer work for a qualified charity. Mileage at 14 cents a mile, the value of supplies that you purchase for that sort of effort. Just note that your time is not deductible. So some other things that are not deductible: raffle tickets. A big one is donations made to benefit a particular person. We see it sometimes with fundraising for a particular person to go do a particular thing. It needs to not benefit that person. It needs to not benefit you. And another big one that comes up is GoFundMe. So somebody has a medical event and they need money and you want to support them, it's a good thing to do. It's not going to be deductible on your tax return unless it's being run through a charitable organization. Usually GoFundMes are not. So I would never discourage you from doing that. In fact, as we talked about earlier, rarely are those charitable donations actually helping you. So being able to give directly to somebody in need, you may not get the tax deduction, but it may be a better place for your money. Are there any questions? Anything I missed? Anything that I should chat about next week? Let me know and have a wonderful week. Thanks for checking in.